Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and this is a daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. If you tuned in last week, you'll know that these are the lines that I drew as my forecast, and I said we would move up. We not only moved up past my pivot point target, but look what's happening down below. We moved up on lower volume. And if you're following along with my trading checklist, you'll know that volume is important for sustaining the upward trend. So next week, I think that we're going to start off with a pullback to the moving average. I do not think we're going to collapse in any way. I just think we're going to see an honest pullback to that moving average, where this former high will most likely act as a support level. It's known as role reversal. Former resistance, once broken, usually turns to support, and by the time that happens, this moving average will most likely creep up on the price action itself. Now, in addition to this, notice we have a higher high on that lower volume, as I said, but look at the CCI starting to hinge lower. That's a sign of a shift in the momentum, and again, it supports my idea of a possible pullback to that former resistance, which again will act as support. Now, if I look at the Qs, this was pretty dramatic. We saw a nice uptick in the Qs. Again, this was my forecast line right there. My forecast from last week was 318.14. We hit that precisely. And an interesting thing for the Qs is that we are at that 20-period moving average, and the CCI is pulling back. So just like the Dow, I think that this moving average is going to act as resistance here, and the pullback will be to go and test the former support that we had from last week's report. So my downside target on the Qs is going to be 306.99. We could even round that up to 307. If you're an option trader, just keep your eyes on the premium. If you're a put trader, a diagonal put spread trader, this is exactly what you want. Our subscribers for the Oracle service have a put spread in the Qs, and this is working out absolutely perfectly. So that's my forecast on the Qs. Now, if we look at the VIX, I'm hopping right to the VIX. Last week, I said we would pull back, and I more or less put a 2-week forecast on the VIX. So we're a little bit past that halfway point right now, and I said we pull back to that moving average. We absolutely did that. Now we're testing support on the VIX down here right around 20. Look at the CCI. As I magnify that, you'll see that while the VIX was going lower, we're getting a little bit of a hinge starting to turn sideways on that CCI. So we have a long stretch of red known as a stale red light. We're long overdue for a green on the VIX, and if you are following the VIX as a leading indicator, you'll know that for the most part it is inversely related to the S&P. So I'm going to leave these lines in place just like that and hop right to the SPY. This is the S&P ETF. You can see again as I zoom in, hit the targets precisely, said we would move up, test resistance. I drew this line from the highs back here on the 16th of February. And look at that. Yesterday on Thursday, the 11th, we tested that, pulled right back, showed a more or less a shooting star, close to a shooting star. You'll see I magnify that. That's a long shadow candle with a small body underneath. That's usually bearish. And notice again, as the price is moving up, the volume is moving down. That's price volume divergence. And look at that, CCI turning lower as well. So when you have the major markets right across the board showing the CCI starting to hinge and work the other way, that tells me that there's a greater chance that we'll pull back. Now for the spiders, I think we're going to drop below that moving average right here. Not too far, just think an honest pullback over the next 5 days, bringing the SPY down to 383.19. Again, keep your eye on that moving average. If we fail to get back up over that moving average the week after next, that could mean trouble for the SPY. Now, I know there's a lot of economic news that's looking very bullish, but the way I look at it as a trader, the more optimistic the investors get, the higher the risk. In fact, I look at that as a direct correlation. In In other words, as people get more optimistic, there's a greater chance of a snapback or even a reversal. So when the markets drop, it usually drops faster than it goes up, and that's why I tend to look for those types of things that will more or less sway popular opinion. So again, my forecast for SPY is 383.19, and we'll take a look next week to see how that shapes up. Now, finally, if we look at IWM, this is the Russell 2000. You can see here, hit my targets again. This is a megaphone top that I drew. I'll have to extend that out. So it works almost right in line with this high. But again, notice what's happening here. I'm going to erase these lines for a moment here so you could see this on a clean chart. Notice how we have a higher high, closed on a higher high today from the highs back here in early February. Notice the drop in volume on the way up. And notice how we have lower highs on the CCI. When Don Lambert created the CCI back in the 80s, he talked about that as a negative divergence, and it's one of the most significant reads that you can get from the CCI, and I take that as a negative. So again, I'm not looking for a major sell-off at this point. I'm just looking for an honest pullback. I'm looking to the left, drawing to the right, just like that. You see, I'm trying to mimic these angles here. You can see when we sold off over this 5-day period, it came off in that gradual slant right there, that angle. Here is same thing. And all I'm doing is just duplicating these pullback points in more or less the same duration. So that could bring us to 224.70, which again will most likely match up with that moving average, and we'll have to see whether or not the moving average reverses its role and turns to support, at which time you would trail your stop up. Again, if I am wrong and it keeps going higher and you're trailing your stop, there is no harm done. In fact, what you're doing there is just protecting the profits. So that's it for now. Have a great weekend, and we'll talk to you next week. So long.